the successful bidders for round 3 of the Renewable Energy Independent Power Procurement Program announced, it has emerged that the price of wind energy has dropped dramatically to a simple average of 74 cents per kilowatt hour, decreasing significantly from the already highly competitive price of the previous round. Joining us now here in studio for a look at the movement in the sector is Johan van den Berg. He's the CEO of the South African Wind Energy Association. Johan, thank you so much for making the time to join us. Of course, today we saw the handing over of 17 clean energy projects, but a lot of work has been happening in the background. Talk to us a little bit about some of the results of the infrastructure around wind power projects that we've seen come to the fore in South Africa.
Well, when people talk about wind power in South Africa, they sometimes talk about a rocket launch after a very slow countdown, and that's really what we've seen in South Africa.
Right.
You know, we took 10 years to stumble from 0 to 10 megawatts installed. That's about 8 towers in all of the country, and at the moment there's about 250 under construction. So we're seeing a very significant new infrastructure sector arising. It's not just in South Africa. You know, over the last 25 years or so, internationally, wind power has grown by 27% per year, and we're finally catching up to that.
Lots of infrastructure projects happening. Does this necessarily translate into a viable contribution to the country's energy mix?
Well, it makes a contribution on two fronts. You know, the 2030 blueprint for South Africa's energy talks about 9,000 megawatts of power installed, and about the same for solar. So that'll be, you know, together about 20% of the South Africa of the energy delivered, which is very significant. And of course, our ambitions don't end there. So in terms of energy delivered, we can also, you know, the renewables bring it online quickly, whereas we've seen that the conventional ones take much longer. And then, of course, there's the job creation and the local manufacturing angle that's very important to us.
Of course, let's look at the cost competitiveness that has come out. I mean, we're seeing the 74 cents per kilowatt hour being praised at such a very low number. I mean, I'm sure consumers are really happy because you have a cheap alternative to energy. But what does this mean for investors who've put funds behind these projects?
Yeah, we have to strike a balance, and you know, I think in our media release we said that we think just this round of procurement from wind will save the country 15 billion rand over, you know, conventional fuel sources over the 20 years or so. That's fantastic for the consumer, but there's a broader picture, and that is, you know, building a sustainable industry with local manufacturing and jobs. And for that we have to make sure that this industry is sustainable and that it's not too cost competitive too soon. So at the moment, the margins for investors have been squeezed very significantly. The biggest reason for the lower prices, despite adverse exchange rate movements, has been that the entities investing now have a far lower cost of capital, not much above government bond yields. You know, and one has to ask whether that's really, if we want to push it much lower, but essentially we're in a very good space at the moment.
So we're looking at, we saw in round 3 that there was a 40% requirement of local content. As we move into round 4, are you expecting that to stay the same? And also, are you expecting investor appetite to remain the same in light of the squeezed margins?
Well, ultimately there'll be a little bit of consolidation in the market, and that's inevitable, and I think it happens in any market. There's a huge appetite for South Africa because we're such a vibrant market internationally, and it's not going that well in all the other markets. Moving into round 4, our ultimate goal in South Africa from the local procurement accord is a 60 or a 65% local content, and government is edging it up there. And the question is always just to do enough to stretch people without, you know, going too far too soon. I think it will go up slowly. We've already seen a local tower manufacturer opening shop in South Africa. We expect a local blade manufacturer to open up next, and that'll again lift the local content a little bit.
Moving forward, where do you see the investment opportunities both for big foreign investors and maybe slightly smaller domestic players?
Well, there is a small-scale procurement program being fledged at the moment by government, and we hope that'll enable South African developers to learn, you know, to really learn the ropes and then move into the bigger league. The perhaps most exciting thing about this whole program is the community involvement. So typically community trusts around these projects own up to now 40% of the equity in these projects, and very, very significant earnings coming out of that after a few years or so. So, and the value chain is also lengthening, you know, so it's going to things like transport, logistics, you know, and the connection to the grid and so on. So there's a whole new infrastructure.
How do we sustain this rather positive story that we've seen unfolding today?
I think the position now is we had to win a place in the sun or in the wind, if you wish.
Yeah.
And I think we've done that. It's in all the plans for government's 20-year vision, and we now have to defend that space. And I think we have an obligation towards the country and towards government to really deliver on the socio-economic aspects. And our belief is that while we're able to do that, this industry will just grow and go forward.